It was a day that began with headlines about politics but ended with panic on trading floors across the world. In October 2025, Bitcoin, the symbol of digital freedom and financial independence, suffered its most violent collapse in years. And at the center of it stood one man, Donald Trump. During a fiery press conference in Washington, D.C., the former U.S. president announced a sweeping 100% tariff on all Chinese technology imports, accusing Beijing of manipulating global markets and stealing intellectual property. The announcement immediately reignited the long-dormant U.S.-China trade war, shocking investors who had hoped that diplomatic relations were stabilizing. Within minutes, the ripple effects began. The Dow Jones and Nasdaq opened sharply lower, tech stocks tumbled, and across the Pacific, Asian markets went into freefall. But nowhere was the impact more devastating than in the cryptocurrency world. Bitcoin, which had been hovering near a record $125,000, suddenly began to unravel. Screens flashed red as the world's largest digital currency dropped thousands of dollars within minutes, triggering an avalanche of automated sell orders. The decline was fast and merciless, a collapse that erased over $19 billion in leveraged crypto positions in a single day, the largest liquidation event in digital finance history. Across the globe, traders watched their accounts evaporate in real time. In Seoul, Singapore, and San Francisco, the scenes were the same: disbelief, panic, and despair. Some investors had bet their life savings on Bitcoin's rise, borrowing heavily to ride the bull market that had dominated much of 2025. As the price slipped below $110,000, exchanges like Binance and Coinbase struggled to handle the volume of trades. By the time Bitcoin hit $102,000, over 1.6 million investors had been liquidated. Ethereum and other major cryptocurrencies followed the same path, plunging by as much as 25%. Online communities that once pulsed with optimism now turned somber. Reddit threads that had celebrated financial freedom became spaces for grief and shock. People shared stories of losing homes, tuition funds, and retirement savings in hours. Some spoke about sleepless nights and financial anxiety. Helplines in several countries reported a spike in calls from distressed investors, while small crypto startups already running on thin margins announced layoffs and closures. Meanwhile, traditional markets were collapsing under the same pressure. Tech giants like Amazon, Nvidia, and Tesla collectively lost over $770 billion in market value in a single session. Semiconductor firms in Asia saw their stock prices tumble, and global supply chains braced for renewed chaos as China hinted at retaliatory bans on U.S. technology exports. Analysts called it a perfect storm, a collision between politics, technology, and speculation. The irony was impossible to ignore. A political decision made to protect American industries had instead destabilized global finance, especially the very sector, digital technology, that symbolized the future of innovation. Economists compared the moment to a digital version of the 2008 financial crisis, where fear spread faster than information. On X, formerly Twitter, hashtags like #BitcoinCrash, #CryptoCollapse, and #Trump tariffs dominated global trends, with millions debating whether the president's move was a calculated political strategy or a reckless gamble that broke markets. Trump, for his part, doubled down. He argued that the tariffs were a necessary step to end unfair trade practices, and claimed that short-term volatility was a price worth paying to secure American dominance in technology. His supporters praised the move as decisive leadership. Critics called it economic sabotage. China responded with a vow to impose its own sanctions, intensifying fears of a new Cold War, one not just fought over trade, but over control of technology and digital finance. Behind the scenes, international policymakers scrambled to stabilize markets. The Federal Reserve issued emergency statements, urging calm and hinting at liquidity measures if financial contagion spread further. European regulators convened meetings on crypto risk exposure, worried that smaller economies could face credit shocks. The International Monetary Fund even weighed in, warning that the intersection of political nationalism and digital speculation had become one of the biggest threats to global economic stability. By the week's end, Bitcoin had regained a fraction of its value, trading near $111,000. but the psychological damage was deep. For many, this crash was more than just a market correction. It was a brutal reminder that even in the supposedly decentralized world of crypto, no market is immune to political power. A single announcement from one government official could send the entire digital economy into chaos. The crash also revealed the fragility of investor confidence and the dangers of high leverage in a hyper-connected world. Millions of people, from amateur traders to tech entrepreneurs, found themselves confronting the same hard truth. Freedom from banks doesn't mean freedom from geopolitics. The 2025 Bitcoin crash will be remembered not just as a chart pattern or an economic event, but as a human story, one where ambition met uncertainty, where political forces clashed with digital dreams, and where the promise of decentralized wealth was tested against the harsh realities of a global system still ruled by power, policy, and fear.